All right, traders, it is the 18th of July, 2017. My name is Jameson. Welcome to Barron's Trading. We're looking at a daily vertical bar chart of the S&P here. We can see that we're trading into the upper trend line here of the bullish ascending channel defined by CC. That kind of creates overbought conditions relative to this intermediate trend that we have. Relative to the major trend defined by AA, we're not overbought. I still have a 247, 254, 257 ish price targets that are present. So we're certainly capable. We have enough cause to trade higher. But again, relative to the current trend, we're trading in the resistance. And, relative to AA, both bulls and bears are entering positions in the middle of the trading range, and that just sucks for everybody. We did have a nice bullish breakout here of the RSI, but we still have a bearish divergence that's present. So I think that it's going to take several more tests and retests and trading ranges before we see some technical realignment here of the RSI. The OBV, the on the bounce volume, actually had a nice little breakout, so that's nice. We can see here what I've highlighted the bear sessions here. We can see that supply is contracting. There's not as many sellers, and that we are starting to see some buying here. I'm not seeing a lot of demand. This is probably just some shorts that's covering, which is great, but that also means that those gains generally aren't sustained without increased buying effort. Nonetheless, we did gap down lower today, and we closed up at highs for actually a new all-time high for a close. So despite any opinions, that's very bullish, and the trend remains intact. So that's very attractive. Let's look at a few other things here. Let's take a moment. If we look at, this is a 4-hour chart here, and looking at this 4-hour chart, we can see that we, obviously that we break out, and then we break down here in this 4-hour session. We backtest my magic red line, and then we trade higher. What's a couple of things that are important here is that the cumulative buying continues to show that there's some buying pressure there, right? We can see that it's rising. It's not being sold. It's not dipping. We can see here this is volume, right? So this is volume, and on this hammer that's formed, this is actually a perfect spring, right? We have an established level of support, prices violate it, and they pull back and they trade within that range. That's a spring. If we get some upward follow through, or we break out through highs, very bullish. If we don't get follow through, you have to be a little suspect that we're going to remain in this trade range for a little bit longer. Now, so we do have some volume associated with that spring, with that forceful effort here. But if we look at the delta here that's present here, we didn't see a lot of selling pressure. So we do see the effort, we do see the volume, but I don't see a lot of divergence here. I don't see a lot of offers hitting the tape. If we look at this is a 60-minute chart. The 60-minute chart, we begin to see that there's some large block trades that are printing. I can still appreciate that the cumulative delta is rising, so we have some nice buying pressure that's there, but these block trades correlate with some big dips that are there, so we may see some larger professional traders kind of selling in the strength. I don't make any more, I don't create a bias other than I allow these block trade areas to develop areas of interest, right? So bottom line is, we are bullish above this level and we're bearish below it. That's the only way you can kind of treat that level. But let's take a look here on the footprint chart and see if we can find anything specific to these breakdowns or back tests here. And if we look at a 4-hour not point and figure, but a footprint chart, we can see here, right? So let's get on to the 4-hour. 1, 2, 3, 4. So here's that 4-hour session here, right? There's that hammer. Each one of these is a candle. This is the hammer. So what I want to show you here is that we have bids and offers. Bids are positions that bulls want filled because there's demand. And then the second side, bids and offers. On the offers, we have sells. We have sales. And what we're seeing here is that sellers come down and hit the bid, and then buyers will come up and hit the offer, and then now that creates buying and selling imbalances. What I'm trying to show is that on the bottom of this this bullish spring that was created, there's still some supply that's present. We can still see there's 411 contracts So the auction is not complete. So that leads me to believe that we remain capable of trading higher, but we likely will break back down and test this level, right? Because the market can't, if it truly is an auction and it's balanced between supply and demand, we can't continue to go higher if we know that there's more supply. We have to make sure that it's in strong hands and that supply is completely absorbed, and then we can freely trade higher. Not to mention, here in this last 4-hour session, we still have some supply that exists here. Now this may mean that we rally for a couple more days. I just think that at some point in time, price action is going to pull back and back test this level before we continue to trade higher. So I think that we do have a bullish spring that has presented, which is here. I think we may trade a little bit higher, and we're going to break back down and back test it. We need to confirm it as support before we rally higher and sustain any gains. All right, guys, those are my thoughts on the S&P. All right, good luck.